Hey, what's up, guys? Welcome to Accounting with Karim. And in this video, we're looking at the accounting equation. Okay, so the accounting equation says assets equal liabilities plus owner's equity. And if you can see here, we have 7 components to the owner's equity section. We have investment by owner. So if owner invests money into the company, initial capital, more than likely, this increases owner's equity. The drawings is like owner takes money from the company for personal expenses. That decreases owner's equity. Net income increases owner's equity. Net loss decreases owner's equity. Revenue increases owner's equity. Expense decreases owner's equity, as well as dividends. And so these 4 components here: net income, net loss, revenue, and expense. These are all components of the income statement. So the income statement is directly connected to owner's equity, right? So we know we have the income statement. We have a revenue minus expenses equal net income or net loss. And so if we have a net income, this will close into owner's equity, right? So I don't want to get into this yet, but your income statement, those are temporary accounts. So within the fiscal year, we have to close into after the end of the fiscal year, we have to close those accounts into our owner's equity account, and then we start all over. We start all over again the next fiscal year, and so on and so on. Don't want to get into that, and that's for a different video. For this one, it says assets equal liabilities plus owner's equity. And it's not a coincidence that we have liabilities before owner's equity. So if the company goes bankrupt, the creditors have first claim against total assets before owners do. So owners have residual claim against total assets, right? So say for instance, we have 1 million in total assets. The company goes bankrupt. We have to sell our assets just to make sure we have liquid cash to pay all our creditors. And okay, so more than likely, we're not going to be able to sell the assets at their actual cost. We have to sell them below market because most of the times company liquidate, they have to sell below market so they can get cash as quick as possible, right? So say for example, we have you know 650,000 in liability that we have to pay creditors and maybe investors, and we were able to sell all our assets for 800,000. We have to make sure that we pay this off first before owners can get the leftover, the residual balance, right? So owners will get 150K leftover. So this is the reason why we have assets equal liabilities plus owner's equity, and not assets equal owner's equity plus liability. The equation is very intentional in respect to how the sequence is very intentional. So that's it for the accounting equation. Until next time, guys, I will see you in the next video. Cheers.